Well, I'd like to thank you for inviting me here today. I'm going to be speaking to you about immigration rules that I think every business broker who's, of course, interested in the foreign investor market should know about. So I'll kind of give you an overview of the different types of immigration visas that the government allows for those who want to come to the United States and invest in our businesses here, whether they're starting up or actually purchasing a business or getting a small part of an investment there. So first, before we go and do that, I'd like to talk a little bit about what we see in terms of the data as far as what I call immigrant investors or foreign investors in the Dallas area. This is a chart from a study that was done that kind of gives us an idea of how many or how much involvement that the foreign investors have or foreign business owners have in our communities. Oh, thank you so much. Much better. Okay. So this chart, I won't go through this, but this is a statistics on 25 of the largest metropolitan areas in the country. And if you can see in Dallas, it shows here as far as the population, foreign-born population of the Dallas area. It's a little bit under 20%. But the business ownership of foreign-born foreign-born business owners is actually almost 30% and growing. Now, most of those immigrated here, not necessarily on the basis of buying a business or coming as business owners. Most of them came in, through family or actually through employment with an employer's sponsorship or that sort of thing. But many do come in specifically in order to buy a business and then invest in the U.S. and eventually become citizens if that's their goal. So next slide for me, please. So the government recognizes this, and in the past few years, especially in order to promote economic growth in the United States, especially since the time that we had the recession, and I think we're still somewhat in it, but hopefully coming out sooner or later, the government realized that investment from foreign-born immigrants could help the economy. And so although we've had ways before of people getting legal status in the United States through investment, they sort of say, well, we're going to try to broaden the ways that we can do that so someone can get a visa. So this website that I'm showing here, this is sort of their outreach to entrepreneurs. It's called Entrepreneur Pathways, and it's a resource for immigrant entrepreneurs. The website is here if you ever want to go and take a look at it. It kind of gives you not that much detail, but some information about the different visas that are available for people who want to invest in the U.S. and move to the U.S. and for investment. So my job, what I do on a daily basis, is to help. I don't match them with businesses because most of you do that. But what I do is I help them to evaluate if they're coming to buy a business or start up a business, whether that business meets the criteria for the immigrant visa or what we call non-immigrant visa, whatever is the best way for them to actually be able to come in and operate the business if they're interested in operating it. Next slide. So I'm going to kind of go through the sort of maze that immigration law is to kind of give you as simply as possible some of the ways that foreign investors can get status and be able to buy businesses here in the U.S. So the next slide, please. Okay. So just really basic facts to know about immigration before we actually go into the options that are available. Someone who is not a U.S. citizen, a permanent resident, or actually even is not even here in the United States, they can buy stock. They can own real estate, they can be an absentee owner, they can borrow money without having any visa status. So again, they don't even have to be in the United States for that. However, if they do want to be in the United States to monitor their investment, to be involved with it, then they do need to have legal status. And that's what we're going to be talking about today. Oftentimes I get clients who are here, maybe working for an employer. They have a particular type of visa. For example, it's what's called an H-1B visa, which is for professional workers. And they also want to invest in a business. Well, can I start up a business? I also want to do this on the side as well as continue to be employed. But self-employment, if they are actively involved with the business, is considered employment. So the fact that they don't actually, the fact that they are going to be working on the side with their own business, that requires them to have a visa to do that. So they can't just say, well, I'm already here on H-1B, I have legal status, and now I'm going to do everything else that I want to do in terms of business. So visas are, status in the U.S. is very, very specific to what you're doing. So, so our clients have to be very careful about that if they're going to do investment. However, again, if they are just buying stock or even just buying a part of your business but not going to be actively involved, that usually can be okay for them in terms of their visa status. So the next slide. So what are the options for legal status in the United States? Generally, immigration law is split up into two areas, or people can immigrate on two bases. Either they're coming as what we call non-immigrant, which basically means they're coming for a temporary purpose. They do not intend to remain here on a permanent basis and become citizens of the United States. So they're coming for a specific purpose, such as coming as a visitor, coming to go shopping, going to visit Disney World, those sort of things, coming to visit family. They may be coming to work for a specific employer. As I mentioned, the H-1B visa is what we call a non-immigrant temporary visa, because that is only for them to work for a specific employer that has sponsored them to do a particular job in the United States. So, and then we also have in that we'll talk about our temporary visas for investors, people who want to start businesses in the United States. They can do so, and even though we state it's temporary, one I'll talk about actually can be indefinite, although it is still considered temporary. So they can stay here forever on that particular visa, the E-2 visa that I'll talk about, but yet it's still considered a temporary non-immigrant visa. The other way that people come into the United States is as an immigrant, which basically means that they're with an immigrant visa, which basically is the green card that many of you probably have heard of. The green card is permanent residence. So if you're coming to the United States, or if you're in the United States and you want to eventually become a citizen, or you want to be here permanently and have the flexibility to work anywhere, live anywhere you want, then you have to apply for an immigrant visa, permanent residence, and get a green card to do that. And one of the programs that we'll talk about today, which many of you heard of, and I think that was the question about the EB-5 program, is what's called an immigrant investor program. So anyone who is using that program to come to the United States is coming to be an immigrant, get a green card, and eventually it will lead to citizenship if they decide to do that. Okay, next slide. So I have here just some of the non-immigrant visas that I mentioned that can apply for businesses or business owners, people who want to buy businesses. I'll really talk about the first two, the E2 and the L1 in more depth. The other two are other visas. Again, I mentioned the H-1B before, and that one usually is not used for self-employment, but it can be. The O1 is a visa that is meant for those who are considered to be at the top of their field. If they can show that in their country they were the top businessman and everybody knew about them, and they created jobs and all those things, then they can qualify for an O1 visa instead of going through an immigrant investor visa or an E2 visa. But the ones that I'll talk about today are the E2 and the L1 visa. So let me go to the next slide for the E2 visa program. Have any of you heard of the E-2 visa? Okay, I have one, two. Okay, great. Well, I'll talk a little in depth. And in your materials, those of you who've had the packets, there's some information there that you can find about the E-2 visa. In particular, most importantly, the E-2 visa program is really limited to nationals of certain countries that have a treaty with the United States. So not everyone can qualify for the E-2 visa just by the fact that they're not part of that, they're not a national of that particular country. However, the list is fairly long. There's about 60 or 70 countries that have treaties. So if, for example, you have a client who is from Austria, they would qualify for an E-2. Other countries such as ones we've dealt with, a lot of African countries. Canada is a country that is eligible for E-2. And Mexico as well. So some of our neighbors there are there. Korea is another one. China is not, so that's why you don't see anyone from China. Many of them who come in will use the EB-5 program because they're sort of limited to that. They cannot qualify for the E-2 program. But then again, like I mentioned, there are many, many, many countries that are eligible. So if you have a customer or client who has that nationality and they want to quickly be able to invest in the U.S., buy a business, and then get status, then the E-2 might be an option for them. So what are the basic requirements for the E-2? Mainly, the investment must be substantial. And I had a question earlier, somebody said, well, what does that mean to me? How much do they have to invest? Well, there's not a specific number in mind. The idea is that the amount of money that you invest or to buy a business, for example, has to be sufficient to keep that business operating. Okay, so it really depends on the type of business that you're buying. The government will look and need to see a business plan that shows exactly how your investment is substantial enough to continue operating that business if you're buying that business. The investor must be in control of the funds and the investment must be at risk. Now, at risk doesn't mean that the business has to be risky. What it means is that you actually have to put that money into the business. It can't be just sort of set aside and say, well, I'm just, I'm looking for a business, I'm going to have that set aside, and if something happens, I'll go ahead and use that. However, if, for example, you do have a client or an investor that wants to buy one of your businesses, and you're normally what we advise our clients who are actually the ones applying for the visa is that you need to be sure that that's contingent, or the actual sale is contingent upon you getting the visa, because if you buy the business and you can't get the visa, then you're kind of stuck. You have a business that you can't operate, or at least not be in the U.S. and operate. So usually what we do in those agreements, or ask for the agreements to have, is that contingency with the money set aside in escrow, either with the business office or business broker or a bank or somewhere, so that when the E-2 is approved, then the closing can take place from that. Another important fact is that the investor must have controlling interest, so they must have at least 50%, own 50% of the business. So if you're trying to sell a bit, someone wants to sell a share of their business, and the foreign investor wants to get the E-2 visa, then they have to have at least 50% of that business and invest that amount. The enterprise must be more than marginal, which basically means that it cannot be simply for the purposes of supporting the investor. So if a foreign investor comes over and says, I want to buy this small business, and it's just going to kind of give me a job to do. It's not really something that's going to grow and going to, and hire U.S. employees and help the economy and all those things. The government doesn't want that. They want a business that will generate revenues and also generate more than revenues for or income for the investor. The E-2 visa, an average of 150,000 E-2 visas are issued each year. So as you can see, that's quite a few out there. Yes?
I was going to ask, what's the quickest time you've gotten an E-2 visa approved? What's the time frame?
It depends on where they are. If they're in the U.S. and they're changing to a different status, like maybe they came as a visitor and then want to change to E-2, you can do what's called premium processing, which means that they can get approval. I've got it as early as 2 weeks. So it can be done fairly quickly. If they're outside the U.S., they have to go to the U.S. Embassy, and usually they take about a month at the embassies to do that. I want to just kind of emphasize a little bit more about the ownership requirement. So the investor can be a sole proprietorship owner, they can be a majority partner, they can be a majority shareholder, but they have to, have that ownership interest. And again, they must be a national of the country that's on the treaty list. So if they're not, they're not going to qualify. However, there is a provision if you have two people, let's say, that are from different countries, but both of those countries are on the same list, and they want to go half and half on the business, then they would still qualify. So they don't have to be 100% from the same country, as long as they have sufficient ownership rights in that company. And substantial investment, I think it's important to, again, kind of talk a little bit more about what is sufficient funds, because it is sort of a gray area. It's difficult sometimes to show the government, well, this is sufficient, and that's where a business plan and business valuations come in really handy for that, because the government doesn't know all the businesses out there, doesn't understand all the businesses out there, and it's our job to make them see that this business and what we're doing here in terms of funding this business is sufficient to continue the operation of the business. So again, as I mentioned, there's no minimum dollar amount to qualify, but they do have what's called a proportionality test, which basically means it's going to look at the cost, or the usual cost of establishing or buying a business, and going to see how much is the investor putting into that business. So, Usually for businesses, the smaller the business, the smaller the cost of the business, the more the investor has to put in. The larger the cost of the business, the less the investor has to put in. You can see here where we talk about, it's just a rule of thumb. It is by no means anything written in the legislation or written in the regulations. It's basically a rule of thumb that the buyer will be considered to have made a substantial investment. If, as I mentioned, I don't have that up here, but if it's $100,000 and less, they're expected to put the full amount into the business. So if they're buying a business that's under $100,000, they need to pay $100,000. If the business is between $100,000 and $500,000, then their investment needs to be 75%. Between $500,000 and $1 million, they need to invest at least 60% into that business. And then, of course, above $1 million, at least 50% into the business. And when we talk about what is the investment, how are the funds gotten? The funds can be cash, of course, buying inventory. Loans, will not be considered part of the investment unless it's a personal loan. So the investor has to personally be obligated and primarily obligated to the loan. It cannot be, not a guarantee, but they actually have to be personally obligated on the loan. And if there are going to be any assets used to secure that loan, it has to be the investor's personal assets. For example, a second mortgage on their home. But it cannot be the assets of the company itself cannot be used to secure the loan. In order for that, it can be done if you want to, but for it to be actually considered as part of the substantial investment to qualify the investor for the E-2 visa, it will not be considered for that. The next visa program that I mentioned, which is the L1 Transferee Visa, a lot of I think entrepreneurship is pretty high in a lot of countries. I mean, a lot of people, that's how they survive, is to run businesses there. And so you have a lot of people who want to immigrate, have started businesses, have done well in their countries with businesses, and they want to keep those businesses going. But they want to create either a branch or buy another business in the U.S. as an investment, at the same time keeping their existing business going. So one of the ways to do that is through the L1 Transferee Visa program. And it's not necessarily just for business owners. It also includes employees of business owners as well. So for example, it's typically used for multinational organizations that are transferring their employees from nationals of other countries into the U.S. in order for them to work for the business. However, a lot of times we do use this process for small business owners who want to buy a business in the U.S. So the good thing about this one is, unlike the E-2, you are not limited to what country you're from. So any national of any country can qualify. But the main point of qualifying, or the main way to qualify, is for them to actually own a business and have owned that business at least 1 year in their home country or wherever they are, have been employed by that business full-time for that year, and they have the ability to operate their business in, let's say if they're in Nigeria, for example, their ability to continue running that business there at the same time being able to operate the business here in the U.S. They, during that time that they've gotten the L1 visa, they have to keep both businesses running. So they can't say, oh, I'm here, I've got this business, I purchased it, and now I'm going to shut down my business in my home country. They have to keep that running. Otherwise, their visa is invalidated if the government finds out at any time that they've closed down their business as well. It's very important for this visa for the owner to be able to document their business in their home country. And a lot of times it can be difficult because many countries don't have the documentation that we have here. It's not as easy to find and to get. Their tax system is not as enforced as ours is, so basically it's hard to get those kind of records that you would expect pretty easily to get here. But it is important, to look at that if there is a buyer who says, I'm going to be, or if they're working with someone like me, an attorney, we're going to be looking at saying, okay, well, if you're going to offer, if you're going to use this particular visa, you're going to have to document not only the business here, but you're going to have to document the business in your home country. The good thing about it, next slide. For the L1, there is no minimum investment required. So there's no rule, again, like the E-2 visa in terms of how much is enough. You just have to show through your business plan and business valuations to show that you have sufficient funds to operate the business. You also need to be able to show that you're not buying, again, a business that's just to support yourself. They look for businesses that have employees. Okay, that you have employees, or at least expectations of employees within 1 year of starting that business. And then you also have to show the sufficient staff in your home country that's going to be there to be able to operate your business if you are the investor here working on this business in the US. And also the business purchase here can be different from whatever business they're doing, so it doesn't have to be the same industry. They can look for any type of business if they're, even if they're not in food service there, but they want to do a restaurant here, that's fine, as long as they continue to operate both businesses as well. Okay, next slide. Thank you. So those are kind of the two non-immigrant visas that I wanted to talk about. Again, there are others there, but with the time we have, we don't have the time to go through all of those. So now I'm going to talk about the EB-5 Immigrant Investor Program, which is probably the one that most people hear about. That's the one that the government has it's been around actually since 1990, so it's not a new program. It's been around quite a bit of time. Unfortunately, a lot of times the government wasn't approving them, so people who would apply would not get approved, and they're pretty frustrated with the program. So even though there were 10,000 visas available each year, you probably got about 100 or 200 approved each year. Some of that was not because people didn't apply, they just could not get approved, okay, through the system. But recently, as part, again, of the investment, of the idea of economic growth in the United States, there have been a lot more people applying, a lot more attention to the program. In particular, there have been programs called, some of you may have heard, the regional centers. These are either government affiliated or private organizations that have been pre-qualified by the government to offer investment to foreign investors who want to get permanent residence in the US. The way they have to do, the regional centers are a little different from what I'm going to talk about in terms of someone buying in a business individually. Regional centers are sort of like, can be like mutual funds or stock where someone's buying for $500,000 or $1 million into that regional development center, and then they don't have to be actively involved in the actual operations of the business, and they can get their permanent residence, their green card, and work and live anywhere in the country and do other things besides dealing with that particular business. But what I'm going to talk about is actually what we call the private investment, or private, someone buying an actual existing business or starting a new business in the US. The criteria is pretty much the same, whether it's a regional center or a private investment. The minimum amount of investment usually is $1 million. A lot of people say $500,000, but it's really $1 million. $500,000 is the exception, and that's based on where the business is located. So if a business is rural, which means it's called the Office of Management and Budget says that most places that are outside of metropolitan statistical area is considered rural. So Dallas, of course, would not be considered that. But if the business will be located in a high unemployment area in Dallas, for example, then it could qualify for the $500,000 investment as opposed to $1 million investment. And how they determine the high unemployment area is basically it's 150%. If that region has 150% of the national average unemployment rate. So right now, according to what I looked at this morning as far as September data, the national average unemployment rate is 5.9%. So for a location to qualify for the $500,000 in a city like Dallas, it would have to have an unemployment rate of 8.85%, so significantly higher than what we see on a national basis. So there are locations in Dallas that have that, but to decide or to find out whether that location qualifies requires that we look at some of the data and statistics and that sort of thing and prove that to the government as part of the application. So if you have a buyer who is interested in that $500,000 program and they only have $500,000, then you really have to look at the location. The other requirement is that they must, the job or the investment must create at least 10 full-time jobs for US workers, and that's usually over a 2-year period. So if they buy the business, they qualify, and over the next 2 years, they have to have 10 full-time workers as part of their workforce, at least 10. Now, it's for buying a business, it's a little bit different. As I mentioned, that an investor can invest in this immigrant investor program in several ways. Regional center is one, but they can also just start up a new business. You know, they can come in, they can incorporate, they can buy a building. They can do all those things necessary, or rent a building, whatever, in order to start an original business. They can buy an existing business and what they call reorganize and restructure it. So it has to be different than the business itself that they purchased. That one's it's not a very clear term in terms of, or a clear path to showing that, but basically what we would do is to show that there are some changes that are being done in that business to make it different from what was originally purchased. Or the other option is if you're expanding an existing business, like for example, buying a part of an existing business and expanding that 140%. And there's different ways to look at that expansion, that 140% expansion. You can look at it from the standpoint of jobs. So if the business that you buy already has 20 jobs, then over the next 2-year period, you have to show that you've increased those jobs by 140%. And then we have what's called a reviving a troubled business, which basically means that someone comes and buys a business that for the past has been in existence for at least 2 years, but during that 2-year period before the purchase, it has seen a drop of at least 20% of its net worth. So it's kind of a losing business, is basically what we're saying. So if the investor buys that type of business, they have to show that they have maintained the jobs that are, because the idea is that you're trying to save jobs for that business. So if the investor comes in, puts that money in, and maintains the jobs that were already there over a 2-year period, then he or she can actually receive permanent residence through that program. And the last we'll talk about with the EB-5 immigrant program. Next slide. Okay. Again, the investment, like the E2 program, has to be at risk. So that basically means that the money is fully committed to the commercial enterprise. It's not just funds set aside. Even for the regional center program, the money has to be used, and there can be no guarantees of return of principal for that particular investment. The investment, like the E2 program, requires it can be cash, loans, equipment inventory, any tangible property that accumulates to the $500,000 or $1 million investment, whichever one it is. However, again, like the E2 program, it cannot, you cannot have a loan based on the assets of the business. It has to be a personal loan of the investor, primarily guaranteed, not guaranteed, but primarily liable. The investor has to be primarily liable for the loan, and they have to use their own assets to secure the loan. And in fact, that's a requirement that they use their assets. So it can't be just a promissory note with no collateral to secure it. And then the other part is that they actually do have to be actively engaged in the enterprise. And that doesn't necessarily mean they're involved day to day with the business. They don't have to manage it, but they do need to be at least, for example, a limited partner, or they have to be on the board of directors. They have to have some authority in the business as well. Okay, so as I mentioned, there's various different ways that investors can get status in the United States, immigration status. The facts of each case are different. There may be other options. So again, this is by no means a way for everyone to get the status that we're talking about. So of course, as an attorney, I always have to put a disclaimer. This is not legal advice, but this is information that you can use, hopefully, with your clients. And then next slide. Okay, this one is, that's my slide. So if you're going to work with foreign investors, and you may have these, these teammates as well for anyone, but it's important to have at least an immigration attorney, a business attorney, tax attorney, estate planning, tax and estate planning in particular, because most people will have foreign assets. They'll be treated a little bit differently than we would as citizens in terms of tax and estate planning. So it's very important that they get an understanding of all those legal ramifications or legal rules that they'll be subject to by being part of the United States as well. Okay. Thank you. Thank you.